Okay, we are going to be giving an intense update on some of our biggest plays and which makes sense to add more money to. Then we are going to be talking about the Lucid Motor deal with CCIV and what exactly is happening with that, because there's a little bit of a freak out today. Then we are going to be going over my plan for NIO and what I see happening with that. We're going to be talking about my thoughts on all of the market crash warnings that we're getting in the headlines. And lastly, but most importantly, we're going to be talking about your need to hit that ravishing like button and of course subscribe for more videos like this. Charlie puts his blood and his tears into each and every video and he doesn't even get a single like, folks. A single like. Not one ravishing like. Have mercy on Charlie, folks. Okay, let's start with an update on our big plays. We spoke about JMIA as the first of our add money to plays, but I was actually surprised to see how fast this took off. I didn't think it was going to continue uptrending after its big day yesterday, but here we are. But whatever happens in the next couple weeks, I see JMIA going to $90 by mid-2021. I've been saying that for months. And that's why we're so empowered to play dips on this, because this sort of thing happens. Just if you're going to take a position at this price, do not fool yourself into thinking that it's going to be all smooth sailing. I've been saying that the entire uptrend. I'll link to my complete breakdown of JMIA video that I did back in November in the description below. Okay, in terms of our crypto plays, MARA and Riot, well, MARA, lovely MARA, still struggling to come off of the offering news, but up a little bit today. Like I said yesterday and like I said on Sunday, if this dips, this is an obvious add money to play. And every time it dips, it recovers a decent amount. And it's still an add money to play at these prices. And Riot, another crypto play which we talked about on Sunday's Top Stocks video and said we want to dip on as well, well, it really outperformed MARA today, up 20%. And I thought that MARA was going to outperform this weekend. I would have been right had it not been for MARA's offering. Had it not been for you meddling kids. If it wasn't for the offering, MARA would be way over all-time highs. MARA is more heavily leveraged than Riot. It's betting a lot more on itself, so if Bitcoin continues to rally, you're going to see MARA rally ahead at a much faster pace once this offering news gets blown under the table. Yes, an offering is a real deprecating factor for shareholders, but the offering will give more capital to MARA, which can be used to deliver more shareholder value overall and help us get to that price target. Mining for little dirty Bitcoins is a very, very expensive business. Okay, next, NNDM. Nano Dimension, baby. We talked yesterday about how I like this one, even at all-time highs, but that if you're diligent, you want it to dip. Well, I must be the dip whisperer because right after I said that, it dipped. And that would be a great superpower to have if I wasn't also the offering whisperer. This dip was yet another one caused by the company doing a direct offering and taking advantage of heightened share prices. Direct offerings offer more shares onto the market, which dilute the current shares, and then vroom. Seems like every time I call for a dip, the company watches the video and they're like, oh, Charlie wants a dip. Okay, let's do an offering. Be careful what you wish for, Charlie. No, that's not the dip I wanted, but alright. But you could learn a lot about a company by how the offering goes. NNDM shook off the offering like a champ. So with NNDM, I don't think this is one where you have to stress about getting the perfect entry price with. I set my price target on this to about $25, so my strategy with this would be buy a dip and hold through swings. If you haven't gotten a better entry price, this is still a decent dip, and I think this is a good deal. A lot of you folks asked me to do a complete fundamental breakdown on NNDM, and I will be doing that probably this weekend. This is a 3-day weekend, so we'll have a little bit extra time, and I will cover that. Okay, next, let's talk about the Lucid Motors deal. So we talked about Lucid Motors on Tuesday, lovely Tuesday, and I made the case for why it going public would be a big deal. We explained that they were in talks with SPAC CCIV, and that if the talks go through, CCIV will go up rapidly. I broke down the different stages of SPACs. You have the rumor stage, and then you have the pre-anticipatory run stage up to the actual merger. CCIV is in the rumor stage. It's still in the talks with Lucid Motors. It hasn't been confirmed yet. They haven't decided if they're actually going to go through with the merger. And I said tread carefully because this isn't a done deal yet. Understand that this could still fall through. And now today, Michael Klein, the dude in charge of CCIV, came out and said again that Lucid and CCIV were just in talks. Again, nothing that we didn't know days ago, but of course the stock price fell. The lovely financial media, after pumping the fact that they were in talks, decided to take a reverse position and say, oh, hey, the talks might actually not go through. Well, hey, that's the definition of talks. They could happen and they could not happen. Everybody knows that. If you look at what he said, he literally just said it wasn't a done deal and that it's unclear if they will make a deal. So basically nothing changed. It's no more likely or any less likely than it was a couple days ago. Yet the stock price got beat down like a rabid dog or a goose in a goose fire. So really what this drop tells us is that there are a lot of headline jockeys that bought in thinking that CCIV was a done deal, didn't look much more into it, and then freaked out when they saw headlines saying it wasn't a done deal. But it was never a done deal in the first place, and that's why it's so important to watch these videos or at least do your own research. But do I think that CCIV is going to get the deal with Lucid? Well, of course you never know for certain, but let me make the case for it. The analogy that I'd give with this merger is the analogy of buying a new house. When you are buying a new house, you have a buyer and you have a seller, and neither side wants to act too interested because they're going to get steamrolled by the other side. Both sides want a good deal, which explains the lack of direct hyping from either parties right now. All of the hyping came from the financial media. Imagine now that not only do you have a buyer and a seller of a house, but that the house seller's real estate agent and the house buyer's real estate agent are actually the same person, and thus have a double incentive to push this deal through. Well, that's more along the line of what's happening here. So Andrew Liveris, a chairman of the Lucid board of directors, is also an operating partner at the SPAC, according to their website. And this makes Andrew Liveris, or Liveris, I'm sorry, I'm terrible at the pronunciation. I hope he doesn't watch this. But anyways, this makes him the natural link between the two companies. Andrew Liveris has the pull to bring these two parties together, but I'm just saying that I don't think it's a coincidence that one board member is on the board of both companies. It's not like he was just quiet when they said, oh, we're gonna merge with Lucid. We want to talk with Lucid. And then anybody know anything about Lucid? And he's just like, no, I don't know anything about Lucid. He's probably like, I have a great company that I'm on the board of, and it would be a great match. Doesn't mean that the negotiations are all going to work out and that he's the only party here. But if you didn't think they were a good match, there's no way that this would have even gone through to the talking stage. Also, Bram D. Haas of Seeking Alpha pointed out that within the last month, Lucid has posted 3 new jobs specifically related to Lucid going public. Director of Investor Relations, analyst, and most importantly, SEC reporting manager. Even private companies need the first two, but the hiring of an SEC reporting manager and these at the same time as all of these talks indicate that Lucid is obviously seriously considering going public, and they want a partner as soon as possible because that way they get the capital as soon as possible to expand because their deliveries are starting in spring. What better time to go public than like now? If they can do this in the next couple months, that would be huge right before deliveries. And what a better way to go public than with CCIV, where you have an intermediary that's on both of your boards. So in conclusion, let's be real, I'm speculating on deals. This isn't the same thing as financial analysis. It's hard to speculate on deals when you yourself aren't in the room. But at the same time, this is the data that we have, and this is what we have to analyze. So make sure to do your own due diligence, but what I'm going to say is that because we have so many unconfirmed speculations, treat this as a rumor play. This is a buy the rumor, sell the news play. You get in, you get out, you play the price strength, and you take your profit. If this ends up merging, well, that's going to be a huge deal because Lucid is going to be a big player, and this could go up a lot. So watch this deal very closely, folks. That's what I'll tell you. Okay, I want to talk about market crash warnings. Every time I post a video, I get people calling me a fool or stupid or selfish because I'm talking about stocks when everybody knows that an imminent market crash is coming. If I wasn't a fool, I would not be talking about the stock market because you should never trade the stock market if a crash could happen. Why would you take advantage of an opportunity while it's here if someday it could not be here anymore? This is sort of like saying I have a beautiful cake in the fridge, so I won't eat it now because eventually it's going to rot if I don't eat it. So let me just go ahead and throw out the whole cake because eventually it's going to rot. The key isn't so much avoiding the cake or avoiding the fact that eventually it's going to rot, but it's eating the cake while it's here and then getting a new cake when it's not. There's new cakes in both market crashes and market uptrends. There's new cakes in different sectors. It's possible the market stays strong for a couple years, but then certain sectors cool off or vice versa. The fear of a market crash never ends, and it's been present forever. And this is coming from someone who has stressed market risk and almost constantly hammered the market risk throughout the last couple years, even prior to the pandemic. I even made an apology video because I felt that I hammered the market fears too much, like 3 months ago or so. The key is not ignoring the market risk. The key is planning accordingly and being reasonable. When the market actually did crash in early 2020, we talked about how to profit off the downtrend by buying short and fear indexes. And then we talked about how to profit off the upside by buying beat down recovery plays. I was with you guys the whole time during the entire crash. If you look at previous crashes over the last 50 years, there's been huge opportunities in every single crash. And I know that in hindsight, everybody now says that in 2020, it was obvious that the market was going to recover. But do you know how many people reamed me as I made video after video on the stock market and the top stocks throughout the entire pandemic? I got comments like every single day, and I'm a big boy, so don't worry about me, but I got comments every day that were like, you're such an idiot. The market can't keep going up. And I was one of the people that didn't say the market was guaranteed to go up. I said there's a lot of risks. We don't really know if it's going to go up or not, but there's a lot of opportunity right now, so why not take advantage of it right now? The truth is that nobody ever really knows for a fact what's going to happen. Our job as traders is not to have a crystal ball. It's to prepare for all outcomes. By using the archaic logic that you can't take advantage of opportunities because eventually they won't be here, well, you're missing out on an opportunity. And I'm not saying that you should do something that you're uncomfortable with. I'm saying take some time to do research into what opportunities you see the most value in and plan for a crash if it comes. If a crash happens, well, guess what? You keep your short-term plays short-term and you cut them, and you keep your long-term plays long-term and you wait till the crash ends. You switch your focus to shorting the market with our leverage ETFs that short the market. You focus on plays that are rallying during the downtrend, and when the downtrend stops, hey, guess what? Now it's time to buy things and snap them up cheap. Rinse and repeat. Anybody who says that there's no opportunity in the stock market when a market crashes does not understand the stock market. And honestly, folks, when you are trading stocks that can literally jump down 50% in a few days, a stock market crash is the least of your concern. Your first priority should be making sure your own house isn't burning before you go and check on the rest of the neighborhood. Anyways, those are my 2 cents, except that a crash is always inevitable. Plan for the crash, have a strategy in place for the crash, be intentional with every single one of your positions, but also recognize opportunity. Okay, lastly, my plan for NEO. I said after NEO Day to not chase NEO if we weren't already in the position. So far, that's been a pretty good tip. But that begs the question, is it too late to get into NEO? Well, my price target on NEO is $100 to $110, so no, it's not too late, but the next catalyst isn't really until February with deliveries, and, well, to be honest with you, early deliveries in the year tend to be a little bit weaker for a lot of electric car companies. So if deliveries are slow in the beginning of the year, maybe we get another opportunity to dip by this, but I do see this going to $100, $110. I would just say, snap it up if we get another dip. If you've been with us since the last dip, when we called it out as a pre-anticipatory run opportunity, then I'd consider your goals. If you'd like to lock in your profits or take some off the table, that is totally reasonable. Okay, folks, well, if you have any questions, feel free to reach out to us in the comment section below or join us on the lovely ZipTrader Circle Facebook group. If you'd like to learn how to trade, would like access to our private chat and daily morning briefings, we also offer ZipTrader U, which we'll go ahead and link to in the description below. And lastly, if you're wondering what broker to trade these stocks on, well, we always like to send new traders over to Webull, and you will get not 1, but 4 free stocks if you will sign up and deposit with our link in the description below. Anyways, folks, have a great day, and I'll see you in the next video.